insurance premiums have gone up.
Correct.
I do not work with a whole bunch of Indy 500 race car drivers, right? Like, I have some really responsible people that haven't had insurance claims. There has been no fire. There has been no accident. There's not even been a ticket this past year.
Mm-hmm.
Rates went up.
Correct.
Why? Hey guys, we have a special guest today, Zach, and he's joining us from Heron Hills Risk Management. So we're continuing our insurance month, kind of education, and their insurance gets tricky. One, because it's so exciting. No, partly because with the insurance. I mean, insurance is boring.
It's boring. We use a lot of paper, right?
And we have to talk about bad stuff.
Correct.
Like, that nobody wants to think about.
I mean, you talk to me when you have to give me money, or you talk to me when you've had a really bad day. So it's bad for you all the time.
So let's just start there. Why do you do insurance?
Why do I do insurance? Because when it's done right and you're there maybe with a paycheck on a very bad day and you make somebody as whole as you can, they're happy, I'm happy, number one. Number two, it's a great career to have a family with. It gives me the opportunity to be at the bus stop in the morning and in the evening.
When did you get started?
I've been in the business for about 18 years. I've owned my own brokerage for almost 2 years.
Good for
right? You. And but you can't start owning. You have to learn the business.
Sure.
So I've worked for the large corporations, 30,000 employees, Hub International, all the way down to a mom and pop here locally. And then 2 years ago, I was like, hey, been doing this long enough. Like, let's be the owner. Let's take those next steps. Let's take the risk.
And so when you were a little boy, you're like, I'm going to grow up. I'm going to be an insurance agent.
Oh, yeah. We all grew up wanting to be insurance agents, right? Okay. No, I was going to be a rock star in Seattle. It was going to be awesome. And I have zero musical talent, so that never went anywhere.
Nice. So 18 years ago, was there something significant that led you into the insurance industry, or was it just kind of
that's a great question.
Opportunity?
So graduated from Purdue and decided that I was going to go to Chicago and be a stockbroker, right? I think the Wall Street movie was out. Everything looked great. I was like, make tons of money, have a good time. I got a job with Northern Trust, and lo and behold, they basically fired everybody. And I was like, well, that's great. I'm about 6 weeks from getting married to my wife, and I have to go home and tell her I don't have a job. And so I literally called a staffing agency. I was like, I'll take anything. And so I got a job at an insurance broker, removing staples from paper and being like, I have no idea what insurance is. I know what Geico is. I know what Progressive is. But hey, they're going to pay me, right? So I took the job, and it turned out to be pretty fun. Nice. Turned out to, I basically had the opportunity quite fast to run a family office, which is in Chicago, which is basically the insurance for the really, 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 really affluent individuals. And it's very fun to structure a program, that corresponds for their personal life and their business life, and then just see how the other people live, right? Sure. It's kind of fun.
Yeah. So. Awesome. All right. So that was way more exciting than what we're about to talk about.
We'll try to make it exciting.
Yeah. So yeah, I think that part of the barrier to truly understanding insurance for all it can be is again that the fact that, one, it's not super exciting to talk about. Two, it's usually got a monthly payment.
Correct.
Where I'm putting money into something that I hope I never have to use. Like, it's weird to imagine that. Like, I've tried to think about other things that I spend money on that I am spending money on in hopes that I never have to use it. And I think insurance is like the only one.
I think insurance is pretty much the only one that you want to spend money on, and you hope you just spend your money.
Yeah, you just hope that you just give it
away.
You
want to talk to me once a year. You don't want to talk to me more than once a year.
Sure.
Trust me.
And so those couple things, but then also just the nature of, I'm feeling pretty good today.
Mm-hmm.
Do I really want to call this insurance person and talk about what if my roof caves in? What if my kid gets into a car accident? What if I have to go to a hospital for X, Y, and Z? What if there's a loss of life in the family? No, I'm not feeling like that today, so I'll do that tomorrow.
Correct.
Right? So we put it off. So with that, like, one of the reasons why we focus on this so much 1 month a year is because we want to kind of necessitate these conversations, or I guess we want to really make you feel like it's a necessity to have these conversations, whether it's with, your financial planner, with me, whether it's with your insurance agent, whether it's and also, but having these conversations amongst family members.
Correct.
You were mentioning the family office. Like, one thing that I've noticed when you start talking about like real money wealth,
yes,
it's oftentimes a family affair. Like, there's not too many people that have a significant amount of wealth where it didn't start because some family sat down and said, hey, we need to structure this. We need to do this. If something happens to you, what are your plans? I need to know this, this, and this. I think that that's important. So as you go home for the holidays, we want you to be empowered and educated enough to ask the right questions, because if something happens to mom and dad or son and daughter, you want to make sure that their needs are met, their intentions are met and carried out. So that's why we start talking about this in November.
Correct. That's part of it. And then it's also making sure that you have the appropriate vehicles in place in case something happens. I mean, that's very important too, because a lot of clients that come across my desk, they have no idea what they purchased. They have no idea what they have, and they don't understand what they do. And so it's as you're talking to your family members, I mean, it's important to understand what you've already purchased and know why it's priced that way, and know why you purchased it. And are you talking to a professional, or are you talking to a 1-800 number?
Yeah.
I mean, there's a big difference between the two. So.
Huge difference. So let's start by just really, I want to understand insurance, and I know nothing about insurance.
Okay.
So my first question, well, let's walk it in here.
Okay.
The law says I have to have auto insurance if I have a car.
Mm-hmm.
The bank says I have to have homeowners insurance if I own a home,
Mm-hmm.
or the property owner says I have to have renter's insurance if I'm renting.
Correct.
Those are pretty much required for just about anybody that's living on their own or has a car. So with that being said, one thing I've seen in my own personal life this year, but as well as sitting down and doing financial reviews with almost every single client, insurance premiums have gone up.
Correct.
I do not work with a whole bunch of Indy 500 race car drivers, right? Like, I have some really responsible people that haven't had insurance claims. There has been no fire. There has been no accident. There's not even been a ticket this past year. Rates went up.
Correct.
Why?
Great question. Great question. So fundamentally with insurance, there is two things, right? Number one, you're paying a premium to transfer the risk to the insurance company. You're doing that. I'm doing that. You clients are doing that. Anyone watching this is most likely doing that. And we're doing that because A, we're required to, or B, we want to transfer that risk to the insurance company, that in the event that something happens, I get paid or reimbursed or made whole, right? Well, basically, an insurance company takes on all these clients. So they take me on, they take you on, they take 10,000 people on, they take 1 million people on, right? And so they get this risk pool of applicants in there. And so while you are good and I am good, 99 other people could be bad. And they share that base risk pool. And so what we're seeing fundamentally here in, I guess, the greater Nashville area is we've seen a couple of things that are affecting that greater pool, right? So insurance is, I'm going to rewind a little bit. Insurance is based off a law of large numbers, in essence, right?
So tell me, let's talk about the law of large numbers? What break that down for me?
Breakdown. In essence, the law of large numbers is the more applicants or more individuals I get participating in the pool, the more likely I am to statistically calculate when a loss is going to happen. Right.
Okay. So if I'm an insurance company, I have 10 people, and
it's gonna be less likely.
We'll say 1% is, one person has, I have to pay out for one person. That's a one, 10 people, 10%, right? But if all of a sudden I go up to 100 people, it's not necessarily 10 people. It could be 12. So now it's, 12%. So the more people I have, the more I could dial in and be extremely accurate. So when I have 1 million people,
correct,
I could really be very accurate on how many people are going to have a claim.
Statistically lost.
Statistical loss. So
yeah. Okay. So what's happened here in Nashville, right, is in the last 10 years, we have gone through an exponential population increase. And so where our base rates were 10 years ago, they're no longer there because the pool has changed. We've gone from, let's say, an insurance company having 100,000 Nashvillians in their pool to maybe 600,000 in there. And that's a fundamentally different rate, because now the statistics have been narrowed down. So when you have an increase in population, you're going to have an increase in losses. Now, you're loss free and I'm loss free, but we're also sharing the risk with everybody else. And that's how the insurance company operates. And so if our shared pool is not profitable, well, then we're changing the base rate. So base rate is where the insurance company is starting with me and you. So when you come to me as a client, we have this base rate that everybody's going to be associated with. Now that's changed. And then you're like, oh, you're a good driver, it goes down. Oh, you have a safe car, it goes down. Or wait, you're a bad driver, it goes up. So that's how it's changed. But everyone in, let's just say, a certain zip code is on a certain base rate. And then your personal metrics change that.
So, and I think that's because I was listening to you. I think hopefully a lot of people, all 10 of the people, they're listening, and what they're saying is, I don't want to share somebody else's car accident. Like, I don't want to share somebody else's risk and have to pay for their craziness. Like, I don't text and drive. I don't want to pay for somebody else that does text and drive. But I think that's important to understand too, because if we were not pooling our risk, what that would effectively mean is if I have a $500,000 home, for me to have homeowners insurance on if I was not willing to share any risk with and nobody was willing to share what risk with me, my premium, or I would have to basically fund a $500,000 insurance. Like, I would self-fund it. So even though my rates went up because I'm sharing risk with a lot of change going on in our world right now.
Correct.
Even though they went up, it's still much cheaper because I am sharing that risk.
Correct.
For me.
Yeah, and for you. And just to go off of what you said, the world has changed. So the example before was on an automobile example, right? It changes base rate. So with the homeowners example, again, population increase. So let's bring in that tornado that we had in 2020, right? So that tornado came through and it decimated, let's just say it decimated, 1,000 houses and businesses, right? And now we have rebuilt, but we've also increased our population year over year. So if that same tornado comes through, it's not going to be 1,000 houses anymore. There's maybe 2,000 houses in that same tornado path. Well, now the same insurance claim is twice as expensive. You tack on inflation, you tack on the supply and demand of building costs, insurance companies are paying out more per claim than they were in the past, which again changes the pool, which changes the base rate, which then is distributed to all of us who share in that pool.
And that's, I think, to put that in perspective, if I was to go out, I built a fire pit deck. It was nice. Spent some decent money, but right. I know that if I was to rebuild that today, it would be significantly more expensive just for me in that one. For instance, the population change, more buildings in the area, more risk for that makes sense. higher cost obviously makes more sense. But even, and that's just with the houses, but even on the road, like more cars on the road because of higher populations mean more car accidents.
Correct.
More car accidents means more shared car or more cost.
More cost, and then cars are more expensive. I mean, there's a demand for cars. Used cars are through the roof, right? So we're paying out higher settlements on used cars or an older car because it costs more to get a new one. So that's part of that auto rate as well. But there are a couple safeguards you can look at to protect you from a situation like that.
You good? Because I was just getting really depressed, like thinking I'm just toast. Like
He's
I'm
toast,
just
yeah.
gonna be stuck
Why am I paying insurance?
paying insurance. And again, I was like, this is why people love talking about insurance so much, because it's so optimistic and
It
good.
is. It is.
So you're saying that there's a little bit of hope, or at least some things I can do.
There are the right products out there.
Okay.
And so the things that you can do is find the individuals who have the right products. And you probably have it. You just might not know it. So with regards to homeowners claims, the single most important thing that you can do for yourself is to make sure you have what's called a guaranteed replacement cost. Now, what that means is, let's say that tornado comes through and your house is decimated.
Okay.
And easy math, I'm an insurance guy, right? Let's say it's a $100,000 house. The insurance company will pay $100,000.
Okay.
Right. Let's say it costs more. Well, with a guarantee replacement cost, we will pay no matter the cost. So if it costs us $150,000 in this example, we will pay that. Right. So therefore, you're not out of pocket money. The insurance company's out of pocket money. So when you're talking to your agent, your independent broker, or even just looking at your declaration pages, you should make sure that it says guaranteed replacement cost. This is the single most important thing you can buy in your home.
So a couple thoughts there.
Yes, sir.
One thing that you've mentioned a couple times, and I know it's this just great term that insurance industry likes to use, is make whole. Like, I think that's important to understand, because the goal of insurance is to basically reset you to the moment before an accident.
Correct.
It's not to make you wealthier.
Correct.
It's not to give you something newer or shinier per se, right? It's to literally, if a tornado hits at 5 p.m., it's to make my life look as close to what it can at 4 p.m. right before that tornado came.
Correct.
And that is the term make whole.
Correct.
So then we talk about guaranteed replacement cost. What you're saying in essence is, I don't necessarily have to adjust my homeowner's insurance coverage every day when the housing market fluctuates. I do need to adjust it and keep up with it on like an annual basis. But if in that course of the year, my home value shoots up $150K, or just the replacement cost,
correct,
it's gonna, like, I don't know. I haven't called the contractor today and asked him what it would cost to rebuild my house right now.
Yeah.
And I'm not going to call him tomorrow and ask him that too. But that guaranteed replacement says, hey, if something happens to you today, we're basing everything off of our last conversation, but we will pay the added cost that we know creeps in.
Correct.
Because of inflation, because of demand, because of
everything that's going on. I mean, I have builders right now who are starting a house at price X. By the time they're done, it's Y, right? And you get a 33% bill increase at the end of it because you didn't lock in a rate. Well, that's what it's supposed to do. It's supposed to make sure that you're not out of pocket. That's the guaranteed replacement cost.
And I think the other piece to that too is understanding, like, inside of all those insurance contracts, those fine print pieces, this is where, like, this is the kind of conversation, this is the kind of knowledge that you need to have, because this is where you can sniff out the, like, insurance agent versus what I call the insurance salesman. Because if I went to somebody that was specifically only interested in selling me a product, or if I went to somebody, if I came and talked to you and you were like, hey, this is the Cadillac of the homeowner's insurance, it has the guaranteed lock in there, and you're like, it's going to cost you $2,000.
Correct.
I'm like, hey, that sounds good. I want to go do some homework. And I go to, insurance.com, and I'm clicking buttons. I can get it for $1,200. And it's because of the little things that insurance companies are allowed to take off, where now all of a sudden I had that $100,000 policy. The replacement cost is actually $140,000, but I chose the cheaper policy, or I got sold a cheaper policy that didn't have the guarantee. Now I'm only getting $100,000, so I'm coming out of pocket $40,000.
And I have seen that claim. I have seen that claim from other people, and then they come to me like, why didn't this pay out? It's because, they click and bought and didn't understand what they were doing.
So that's really important. Like with every, this is every single type of insurance. If you're shopping for, I don't care if it's homeowners, auto, life, disability, like whatever it is, if something is cheaper, you should just really ask yourself, why is it cheaper?
Correct.
Right. And sometimes you can find an expensive policy, and you can find one that is, by all accounts equal, and it's a little bit cheaper.
Correct.
But if it's cheaper, I would say talk to some individual that has a huge amount of expertise and knowledge in this to say, hey, this one's $400 cheaper and it looks like it's the same thing. What am I missing?
Well, there's that, and there's definitely that, but there's also strategies, right? So an expert, your agent or independent broker, can also put a strategy in place for you, right? So if cost is your focus, and that's what the industry tells you to focus on, cost, right? We can help you with that, right? And it's all about not like keeping the product with the guarantee, keeping the product with the coverages, and making sure that you have the appropriate vehicles in place, and like an umbrella, which we'll talk about in a minute. But what we can do is say you have good cash flow, right? We can maybe have a higher deductible to recapture some of that premium, right? Because you have the cash flow. Use that premium that we recaptured to buy other vehicles. So we can take your program that you have, the program A. We can bring program B into play and have a much better value for about the same price.
Yeah.
We just played with your cash flow.
Yeah, and I think, something on our monthly call this month, if you're a client or if you're in our subscription model, you got your link to join the call. It's coming up this Saturday morning is our next one. In that we talk about, we're going to focus on like what is the right amount of insurance. Because you brought up cash flow, we typically start, like when somebody sits down with me and we start exploring what appropriate insurance looks like, we start with goals, right? We start with goals, we talk about stress and anxiety, and then we talk about cash flow. So this is everything I want. Everything I want is driven because I'm afraid of this loss, or this is too much risk for me to handle personally, or I don't have the savings account, the free cash flow, the liquid money to replace the roof per se. So I'm going to transfer some of that risk. And then we start to look at the cost and say, okay, can my cash flow support these things? And that's typically when we'd bring in someone like you that would sit there and say, hey, here's how I would build this into the framework that you just provided. So it's a process. If you want to be on that call, definitely reach out, and you can, we'll put the links to our website and stuff. You can reach out to us and we'll get you enrolled. So that way you can be on this private, because it's super important information. But I guess the next place to go really is, what is it in your opinion? So this is just us two talking. Okay. If I had clients come in here for the next 2 weeks, just doing like a review on just their insurances, as far as as a part of their financial plan.
Okay.
What should I tell them moves the needle the most, as far as like something that you see again? If I own a car, law says car insurance. If I own a home, bank says mortgage insurance or homeowner's insurance. If I rent, then my landlord says renter's insurance. But there's other stuff, obviously, that's not necessarily demanded or required.
Correct. So
what moves the needle?
What moves the needle the most is and what I focus on with most of my customers is liability. And specifically, there's a product out there called an umbrella policy. Now, what that umbrella does, its fundamental purpose is to protect your assets, your earning potential, your income from a very bad day, right? So I'm going to use an automobile example because, I mean, that's statistically where it's going to happen. If you've ever driven on I-65 here in Nashville, Tennessee, it is one of the worst highways in the absolute world. Now, I've lived in Chicago. I've lived other places. Like, it is the worst. So from 840 to downtown, it's a nightmare. But I've had multiple clients who get into 3-4 car pileups. Not their faults, which is good for me, but there is they're part of that accident, right? And what happens, and for the other policy has to pay out for 5 cars. Now, the state of Tennessee only requires you to have $25,000 of liability to drive an automobile, right? I can tell you, if you look around the highways here, there's some beautiful cars out there. I know Mercedes is way more than $25,000. I know, your nice Toyota vans are way more than that. So ultimately, liability is the most important thing to do, because in that instance where you are in that 5-car pileup and that it is your responsibility to make sure the other 4 parties are made whole, if you don't have enough liability, lawyers are getting involved. They're suing you. So you potentially could have your income garnished for a long time to make sure other people are taken care of. And so this product, a wonderful product, it's called the umbrella policy. It's like $150 a year, right? For $1 million, it can go over and above your automobile policy.
Yeah. And
so that same situation, that same scenario where you are the cause of that large automobile accident, you have now $1.5 million of coverage to make those other 4 people whole because it was your fault. So that's just an automobile example. My favorite story on the homeowners, though, your biggest exposure is your children, right?
Sure.
So about 8 years ago, I had a client who had his teenage boy hanging out with 2 friends, and they decided to play with some gasoline, right, outside. Parents are home. They're watching TV. I don't know why the kids were standing downwind. Like, you would think a 13-year-old would know not to stand downwind. But they were, and they put some gasoline on a fire, and then we had 3rd-degree burns up their legs.
Oh, man.
$800,000 were paid out by the insurance company.
Wow.
Your standard homeowner's policy from your standard carriers out there that we all know their names usually provides $100,000 of coverage.
Wow.
And so in that situation, we had an umbrella, which was great. We paid it. But in that situation, if you're with that standard carrier that we all know their names, you would be on the hook for about $700,000 for surgeries, for pain and suffering, for, kids technically have a future earnings income that's calculated into there. You would be working a long time to make sure that they were taken care of, right? And parents were home. I mean, they were home. The kids are kids, right? The 13-year-olds, fire's cool. That's what they did.
Yeah.
But that's why you have the appropriate program in place to make sure that not only you are covered, but your sibling, your offspring are covered, right, going forward.
Yeah, so. And I think, like, just to drive home the fundamental piece of the umbrella, why it's called an umbrella, because it sits over the top of your kind of basic insurances, that homeowners, that car insurance. And again, to your point, insurance, like, you are not, just because you have auto insurance, you made decisions on how much and what to cover. Most people, again, look at their cash flows and like, I can't afford $500 a month. So you make decisions to assume a little bit more of the risk so that you pay the insurance a little bit less on a monthly basis or annual basis, whatever. Every time we bring down the amount of coverage we're being offered and we assume that risk, we're really opening ourselves up to have to pay out of pocket at some point. And to your point, like, a lot of these state minimums are nowhere near what the cost of anything is. So anything past, like, if you're driving around Franklin, Tennessee, probably I would imagine the average cost of the car on the road here is $75,000 to $80,000.
I would agree.
And there's a lot of, like, expensive cars, inflation's high, labor costs have gone up. So even just a small fender bender could be a $30,000 to $40,000 kind of insurance bill.
You hit a Bentley, it's going to be expensive for a bumper.
And so if you only have that $25,000 minimum, you're kind of hosed. One thing to note is a lot of times your umbrella policies that you purchase will require those underlying, the homeowners and the renters insurance. to have certain thresholds of coverage that don't align with the state minimum. So again, because here's what I've seen. I've sat down with somebody and they're like, "Hey, Brandon," they were so proud of themselves. I bought an umbrella policy. Bought an umbrella. That's great. That's great. Let's look at it. Looking at the umbrella policy, and I'm like, okay, last time we talked, your insurance, your coverage was state minimum. This says you have to have $100,000 of liability on your auto policy, right? Whatever the case may be. And in this case, they didn't. I was like, okay, so you understand the difference between your $25,000 of coverage and what they require, you're responsible for. So you have this $1 million umbrella, but you still would have to come up with at least $75K just because you didn't also raise this. So I'm saying that as a nuance to point out that people oftentimes, they'll listen to this or be like, oh, I'm going to go get my umbrella policy. They call, they get their umbrella, but they're not working with some person that's educated. So they're missing the little nuances because the insurance industry, there's a million nuances.
Correct.
Like your job is not easy. There's like going through a policy and putting that policy alongside other policies of, disability and life and all these other things and making it like an actual ecosystem that collaborates.
Correct.
Is difficult. Like it's not easy work. And so take advantage of people like him that are willing to sit down and have these conversations with you. I think it's so important. I agree. I love my umbrella policy. It's like my favorite thing that I have. I actually do.
Exciting.
And it's super affordable. Yeah. You're talking about like mine is like, I think I pay like $275 a year.
Uh-huh. I think I pay like $298 for $2 million.
Yeah, but it's up there in the price. So it's great. It provides all kinds of additional little protections.
It does. It pays for your lawyer, right? So if you are an outside of that limit, right? Say I buy $1 million umbrella and I'm the 5-car prior accident guy, they're going to pay. Their lawyer is getting paid to defend me against that. And even if I'm fined at fault, I still have that $1 million right there. So that lawyer cost is separate. So that's one of those added benefits of having that umbrella.
Yeah. So I would say, like as far as move the needle, bang for your buck, I was thinking I was going to make a really cheesy dad joke when we talked about umbrellas. Like, why would I insure my umbrella? And then I was like, well, I insure my cell phone. Might as well insure my umbrella too. We're not talking about insurance for your umbrella. It is umbrella
Correct.
insurance. But that being said, for I think for Verizon, it's like $9, maybe $13 a month for phone insurance.
For your iPhone, yeah, probably.
So that's roughly $100 a year that I'm paying to insure my phone. So adding an umbrella policy for $10 or $15 a month, you usually pay it a year because it's like $150 or something like that.
You can add it to your monthly payments if you want automatically. It's like $9 to $15 depending on who you are and what you have.
It's seemingly a no-brainer, right?
Correct.
And the problem is we don't know what we don't know. That's the whole point of this conversation, is to give you enough to say, hey, either one, can I do the homework and learn a little bit more about it? Can I call Brandon and ask him, how does this fit into my life? Making sure that the advice that we're given is not just good advice, but it's good for me or good for you advice on the individual level. But this is really just about empowering everyone out there to know a little bit more, to ask the right questions, to put you guys in a position of like pursuing financial independence in the path of least resistance. A lot of people out there are doing the right thing. Again, that client, hey, Brandon, I got umbrella. She was so proud of herself. She was just missing a little nuance that she had no business even understanding. She did not need to know that. And she shouldn't have known that at that point of her life. So it was a very innocent mistake because she went through a website that didn't have a whole lot of empathy for her individual situation. They need you to get to that close button or sell button, whatever. So anyway, we really appreciate your time. Zach, you got any parting words?
I guess my parting words is unless you're an insurance broker, you should probably talk to one for your insurance, right? Whether
Absolutely.
It's, and talk to your advisor, Brandon, and they can quarterback that to you. But You don't know what you don't know.
Absolutely.
Stick with what you know, and that's great, and rely on somebody else to do this for you.
And I'll second that. Even for my insurance stuff, like I have a very good grasp of insurance, and I'll typically design my own thing that I need, but I will still send that to someone like Zach and say, hey, Zach, this is what I need. Tell me your thoughts. Mm-hmm. What am I missing? Because there's just stuff that changes too often for even me to keep up with everything.
Right.
So I echo that. Annually, guys, we sent out a newsletter to all of our clients last weekend. It'll be posted to the website hopefully in the coming days, maybe week. But it has in there an end of the year checklist for you guys to work through to make yourselves kind of financially set. One, to make sure we end the year in a good spot, but also to set ourselves up for financial success and growth next year. In that checklist, update your insurance coverages to make them appropriate. Hopefully you've seen net worth growth this year. Hopefully you've seen earnings and wage growth this year. Hopefully, you've saved a little bit more money. Hopefully there's been enough significant change in your life that you have the ability to sit down and say, hey, I made decisions last time on my insurance based on cash flows. That's changed. I made insurance decisions before because my net worth was here and now it's here. That's changed. Sit down with someone, say, hey, what recommendations do you have? And then talk about it. That's all I got.
That's all I got.
Appreciate your time. Hopefully you guys are a little bit smarter now. Thanks for enduring a insurance conversation, and we'll talk to you next time. Thanks. We hope you learned from our conversation today. It is important to us that you know this is for educational purposes and not intended to be considered specific advice for any individual listener. If something we discussed is relevant to you and you have questions of how it might be applicable to your specific situation, please reach out to your financial professional. Of course, we are happy to have further conversations with you regarding specific questions or applications to your individual financial situation. With that, here are a few disclosures. Securities offered through LPL Financial, member FINRA, SIPC. Investment advice offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Harpeth Wealth Partners are separate entities from LPL Financial. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Hypothetical examples presented are not representative of any specific investments. Your results may vary. With that, thank you, and we look forward to having you back. Take care.